Ladies and gentlemen, welcome to the Fintech Friday show. With me are my co-hosts, Tevis, Fun of Investing, and Roy, Crossroads. How you guys doing? $25 on SoFi. How does that make you feel?
Beautiful number.
Yeah.
It's especially poignant since I think most of us, when we made our interview predictions, we predicted that SoFi would hit $25 this year. People outside of the SoFi community, not you guys watching, laughed, made fun of, thought that was ridiculous. We're here.
Definitely laughed a lot, that's for sure.
Jacob says, I'm here. I'm trying to watch this Tevis mukbang because I brought pizza and I'm going to eat it on stream and y'all are going to watch me. Thank you for putting me full screen, Tanner. Thanks for that. Yeah, I'm going to eat this pizza and you guys can enjoy. That's your reward for holding to 25. All right, you can take me off full screen.
I wanted to keep you there just a little too long. Oh, that's too funny. But look at this. Look at the 1 year chart, up 247%.
Not bad.
Yeah.
It's it's a bit of an opportunity. No, I'm just kidding. That was the classic thing that people would say is like, well, yeah, you're up a little bit, but opportunity. I will take that kind of gain over a year of any stock, any ticker, doesn't matter what, and be very happy. So, love it. Congratulations.
It's good, I guess, for a bank. It's not like it's a tech company or anything.
Yeah. Dude, I love this comment. I posted about, us hitting 25, and this guy said, counting pennies. Move on, my friend. What are you talking about? I'm up 250% in the last year. So I don't know. It's not like we're like, it's $4.28 and I'm like $4.31, baby.
Yeah, exactly. Yeah.
But yeah, quite the milestone. Do you think we'll be doing this show whenever we hit 50?
Well, the nice thing is it's Fintech Friday now, so not specifically SoFi. But yes, 50. 50 I don't think is as far away as, a lot of people think. I don't know that we hit it next year, but there's a chance.
We were doing the show when it was at 5, so I don't see why not.
Yeah. It's only a 5x from some of the lows, or potentially even higher if you bought in at 4, which those are the lucky few that have the 6x right now, or nearly 6x. Unbelievable. If I know there's a few people that ended up getting in that low, got to buy it, like not just average down at that price, but that's where they made the bulk of their investment. It's crazy. So
my first buy was under 5, and I went in pretty hard.
Your first buy was under 5?
Yeah.
Well, why didn't you say so? This whole time I thought I was talking about people that I know that's done that. And
No. I had my eye on SoFi for a while, but I was 90% invested in Palantir, so I'm like, I have no room for anything else. And then I saw it was, I believe, in May, so that would have been first quarter earnings came out, and they were great. I mean, like most of the time for SoFi, they're either good or great. And they were awesome, and they got sold off again. Like, this is dumb. Like, I don't know why the market hates this stock, but it's an incredible company. I want to diversify, so I'm going to go in. And I didn't do what I normally do. Like, SoFi was so low and so beaten up. I wasn't like, well, I'll just DCA slowly over time. I was like, no, I'm going to create a sizable position right there, at least relative to my portfolio size back then. And the rest is history. I bought, actually, SoFi was the first stock that I'd bought in like a year, since just like every penny was going into Palantir for the longest time. Robinhood was shortly after that.
Yeah.
It was a good month, May 2023.
You guys want to see my lowest buy? I'll show you my highest buy and my lowest buy if you want to see that.
Sure.
So this is the lowest, was 454.
Nice.
And then I think I have the highest here too. 69 shares at $23.61 was the highest buy in 2021.
Yeah, that's about my highest buy.
I'm up 10% on my original tranche.
That's about the same as my highest buy as well, except mine was like 2 days ago. So little different on the pricing. We've gone so far, and the stock price has risen. Well, yeah, it's changed a lot. Oh, he's taking big bites now. He doesn't want you to see him dislocate his jaw to get his mouth around the crust of some pizza. Yeah, Tevis is a beast. Just because he's mowing on some pizza. Okay. There was some. So, okay. Actually, first, I want to talk about Roy a little bit. Roy, I'll have to say you were probably on the bearish side of the dilution decision because it killed momentum. Out of us, the bearish side.
I wasn't bearish against the raise. I was against when it was raised and how it was raised. That was my criticism. So same with data-driven investing. He's not been here to mention it, so I sound like I'm just an outlier, that I'm an idiot, and the rest of the SoFi community was all the other way. I think that today's price action is actually the opposite of your post. You indicated, you're like, hey, this validates. I think it's the opposite. I think it's very, very obvious that there's a high probability of continued price momentum to the upside. And of course, that halted it over the short term. Now we're back at 25 a share. If they had waited, do you think that we would be lower than where we are right now? No, that's asinine. So I think very likely that we would have been able to dilute at a higher level, which would have meant maybe like 10 million shares less, or not 12 million shares less, depending on when they're diluted, right? Which isn't like the most massive deal, but what it does is it makes that instantly accretive, basically no matter what the scenario is at all, period, which would have been, I think, better in my mind. Plus, I didn't like the timing of it just because it distracted from that ridiculously strong quarter.
Yeah, but if they diluted now, obviously they would have had to use less shares.
Exactly.
But that would say, never do a raise because the stock price might be climbing up higher, but it would have killed this momentum then.
Well, I mean, I would have been fine with it then, because at this point it becomes, no matter what, instantly accretive. Like there's no way that you can argue that it's bearish. If they of course waited for 30, 35, 40, hypothetically, it's better and better. But like this is the price level that honestly it would have been better for, and it would not have distracted at all or taken anything away from that amazing quarter that they had as well. So it was the timing and of course the level as well where they sold. That was my criticism, but I wasn't like, this is bearish and awful. I did take some profits at the time. I've kept people mention that, and I have options. Like you have to take profits along the way with leaps, or I guess you can just buy leaps and use that to buy more stock later at the level that the stock was. I've done that before, but I mean, like that's not the normal way that at least I do leaps. I do it so that I don't have to sell shares at all, and I can still take quite a nice profit. So yeah, I still think they should have waited. I think it would have been far better. Obviously, it would have been. Like hindsight's 2020. You never know. Like could have been different scenario, alternative reality. SoFi doesn't get back up to that same price level for years. That's not the reality we're in. Like clearly, hindsight being 2020, we know that it would have been better had they waited.
Yeah, but yeah, like you said, there's zero ways for them to determine that. Same with writing that previous deal with Morgan Stanley, and Noto ended up getting a loan on his shares. We could have waited for the stock to be higher, but then, maybe he would have had to have sold shares or something like this in order to raise for, like, I think you're picking the one side without, taking into account the other. You like, your biggest harp was that it kills momentum, but if it happened now, it wouldn't have killed momentum at all. How does that make any sense?
It would have killed momentum too, but not like right the day after the share, after the earnings was done.
Yeah. I think they just wanted to do it right after, or like any point after, while not affecting guidance. I think that it's just designed to destroy or like to beat guidance.
I mean, people are saying I was wrong. I was absolutely right. We got to a higher level very quickly. in spite of that. Like, and
I
I
don't
don't think that
honestly.
anyone can argue that we would not be here had they not diluted. Like that's just kind of a ridiculous argument. So, yeah.
I love you, Roy, but I think you're flipping the script a little bit. I mean, you said you were trimming. You said that if it's not for a crypto acquisition, then you're bearish on that. And then
Not for an acquisition, not just crypto acquisition.
no, but you said if they're using it just for debt pay down, then you would not be happy with that.
I said that I would have preferred them to actually do an acquisition instead of just debt pay down. Yes.
And then,
Strongly preferred.
but if they did it now, you'd have no problem with it. Like
if they did
less
it now,
than
yeah.
10% increase from where we were.
Yeah, my biggest issue again was the timing of it. You taking away in the level of it. That was it. It wasn't that they did it. Like go back.
But the timing did. That's what I'm trying to show you. The timing didn't matter. We're at 20. We just hit a new record.
So they would have diluted the exact same number of shares for the exact same amount of money. I'm confused.
No, but we don't know. Like
we do now.
I know, but you're seeing how the market didn't care about the dilution.
I mean,
it did at the time. Like,
does it matter? Like we're at all-time highs. Like who cares?
No,
yeah. I mean, it matters a little bit. It's not like a huge thing. It's a small thing. They could have timed it better. They could have done it at a less dilutive amount, just because it would be a higher level. Hindsight again is 2020. I'm not like they should never have done this. It's a huge mistake. I'm selling all my shares. I mean, I trimmed like 5% of my position that were options. So it was a very, very small marginal trim. It was not massive. But I was like, hey, they could have done this better. And I think it's okay, guys, to not be like, okay, everything SoFi does is amazing and perfect always. It's okay to be like, you know what? I'm okay with it. I trust management, but they still could have done it better. And that's where I've been with every single stock that I have, including, Palantir, including PayPal, including Robinhood, is if there's something I don't like and I'm not like 100% bullish on it, I can still love the company. I can still be invested, but I will call out and say, hey, this is a weak spot. This is an area that can improve. And literally every company can do that. I don't think I'm being overly critical. I don't think I'm picking on SoFi. And so, yeah.
No, I don't think that's not really what I was trying to point out there. I just, I don't know. I thought you were more bearish on that. And then whenever you were saying that you weren't, and that, you were perfectly, I felt like that was kind of like you saying that I was mishearing you, but we had multiple conversations about it. So that's all. I'm more just, going in on the fact that I thought your stance was different. That's all.
So they will end up diluting again at 25 because we just became eligible for that first tranche of PSUs. I mean, they have to obviously maintain that average, but they will dilute again at 25 if we have a $25 average for the next 90 days.
Yeah.
So it doesn't matter. Like,
yeah, well, it'll be, I don't know if it vests like that or if it's at June. I don't know how that works, but
I think it's any point before June that they can hit it.
And this, by the way, this kind of dilution, the PSUs, 100% in favor of. That's awesome. It's well-deserved by SoFi management and SoFi's team. They have done incredible things with this company when everything was dark and everything was taken away. I know we'll talk about Noto's announcement, but I mean, like the next 5 years are going to be amazing. And also it's performance based on the stock price action. So it's very good no matter how you slice it for investors too. So all dilution is not bad dilution. I know sometimes it gets a bad name, but yeah, this is great.
Yeah. No, I think that's a good point. Like Noto getting paid, that this is like the sort of thing with Elon Musk, even after they took the vote and they could have just taken away all the pay that he had received for bringing up the stock so high, but yet shareholders still voted for him to get paid because that was the rightful thing to do. But if Noto gets paid and that adds to the dilution, it was well worth it. We have to remember we came from 4 and now we're at 25. I mean, that turnaround from a pretty dark point of a student loan moratorium, a drying up of capital markets, all of these things to still find growth in Galileo, financial services, continuously pivoting the business. Let Noto take his bonus. That'll be well worth it.
Like, okay, I'll take the other side of that argument. Like, I'm all for management getting paid, and I think that they have more than deserved it. But if we're calling a spade, I think the dilution for them to shore up their coffers as a business is more important than the dilution for any executive getting those shares. Because at the end of the day, management was executing when the stock was at $4, consistently executing, knocking all their numbers out of the park, and they couldn't control the stock price, right? And for whatever reason, because we're in a bull market now, the stock is 25, it might go to 50, and management will get paid regardless of, like, they're still doing the same thing that they were doing 3 years ago, and the results in the fundamental business are the same. But just because we're in a bull market, like, now they get paid versus, last year or 2 years ago, they didn't. And as investors, like, we won't see any of that money being used for operational purposes. It's just like a reward for management, which I agree with, because I'm happy with the stock going there. But I'm saying the dilution that we got a couple weeks ago is better for the business than the dilution that executives get, because Noto having millions of shares already and then getting more shares doesn't really do anything for the business fundamentally, other than makes Noto more incentivized to keep executing. But the dilution we had a couple of years ago actually adds money into the business's operational, like, flexibility to expand their growth rate.
Yeah,
Well,
but
yeah,
you
but,
kind of
I mean,
brushed
the
off that
model-
comment, like, about Noto. You're saying, yeah, I mean, I get that it incentivizes Noto to, work for the business, but that's not a small thing. That's not a tiny. That's the biggest thing.
It's a huge thing, but I mean, like, it's not a resource that the company can leverage to accelerate their growth.
Yeah, but I mean, like, the model that most companies in the United States, at least that are, in the last 10, 15 years, especially related to tech, is built upon that. Basically, that you're paid also, in salary, but you're also paid in equity as well, which, I mean, that has meant sometimes when the stock price, there's a disconnect between the stock price and the actual performance of the company, you get underpaid and you struggle and you suffer. There are other times when, like Nvidia, like, I can't remember how many millionaires that they have now, but they have a lot because
It's like over 50% of the employee base.
And I prefer personally when those that are leading the company and those that are building the company have the same incentives that I have. Like, they're, yes, have some money to pay for things. You need to do that. There is such a thing as too much SBC, but I don't mind this at all. Versus, like, there are many companies out there that also have PSUs based on other measures, which aren't necessarily accretive to shareholder value. Like, they should be, they could be. But for instance, Dan Schulman's PayPal, they changed the way that they had to do this just because they realized, like, hey, we were going for, I think it was active accounts, and I know for sure top line revenue, and that made, like, no difference at all because they weren't focused on the bottom line, and that was detrimental to the company even while massive dilution was happening. Well, not massive, but large enough. And so this is one of those areas where it's like, okay, if SoFi is going to underperform, and maybe it's not their fault, but as a stock, and we're suffering as investors, I want them suffering along with me. I mean, but on the other side, the stock price is up, and that's a measure that we're using for PSUs. I want them to have every bit of those shares. Same with when Palantir, like, same structure, benefited immensely from the AI hype cycle, which made the share price go through the moon far faster than they expected when they did the RSUs. And so there's a massive amount of dilution there at the end of quarter 4, quarter 1. I mean, honestly, I'm not complaining as a shareholder just because their gain is tied to my gain, and I made out just great. And I'm like, hey, these employees have been working hard. They've built all this for me. I have no problem with it. I think it's a fine form of dilution.
We have to we can start writing the bear case or sort of the bear case protection for Q4 2025 whenever they do get paid out on these options. Because there will be articles that come out saying, look at the stock-based compensation on SoFi, how ridiculous this quarter is. But I do actually think Curtis here sums it up well. The incentive for Noto to perform more than makes up for the dilution, diluting 5% when 100% stock return makes sense.
Right. And honestly, like, SoFi has so many tailwinds and the business is so strong. And again, we're going to talk about, like, the Noto post that he did. They have a lot ahead for them. This is not like $25 is the peak and this is going to be the highest we see in the next 5 years. Like crazy things can happen, right? But that's very unrealistic. Instead, I think it's going to be similar with, Robinhood, which has, well, Robinhood's a bad example. Palantir, again, has an egregious amount of SBC. But you know what? Nobody is complaining at all. That company is growing ridiculously. The stock is going up. Insiders are selling left and right, and everybody's like, meh. Like occasionally people mention it, but nobody cares. And that's going to be the situation, I think, with SoFi over the next few years. Is like, oh man, look at all this SBC. Look at this ridiculous compensation. Look at these insider sales. Because I mean, they deserve to bank some profits. Noto is buying at a very low level. If he takes out, like 10, 15% of his position, that's not bearish. There's many reasons to sell, and he's well deserves it. That'll get a little bit of action, but as long as the company is performing, that's not going to distract at all. I don't think that's going to take away from the momentum at all either. So,
yeah. What's it called? I really want to talk about Google really quickly and Visa. I'm sure, Roy, you saw the open banking comments that they said. But if we could quickly talk about Google, what did you guys think about the deals that ended up closing this week with Apple and Meta? Or not closing, sorry, that ended up getting disclosed or leaked to the public.
Yeah, I mean, that's really good for Google. And it also showcases just how weak Apple is. The one thing that is that we need to keep an eye on is the regulators, honestly. If it wasn't for regulators, it would be unilaterally bullish for Google. Regulators may step in, or even because they see that deal, consider decide to go a little bit harder after Google, which, I mean, honestly, it's not Google's fault that they're so successful. So I think it's a bit ridiculous. I don't think that regulators should slap Google at all. All-time high, by the way, on Google. So congratulations to you, Tanner, as a shareholder.
Thank you. It's been a great week, man. It's been great. I love whenever markets are super bullish. And not only that, I felt like it was a really great teaching moment for whenever we had those quick sell-offs. I think it really shook out a lot of weak hands and people got really worried. And I saw many comments of people promising that the correction is started. And this is exactly why markets are so fun and why it's nearly impossible to predict, because that lasted all of 2 days. And then we were back, roaring again on growth stocks. So yeah, Jay Powell's a powerful man. And if he thinks that, it's time for maybe policy changes, the market gets excited, and there's few companies that benefit as much as SoFi does whenever rate cuts actually come in. That and Open Door, I guess.
So speaking of, do we want to throw up the Noto comment and chat about that a little bit?
Yeah.
Well, before we do, you mentioned Visa. Do you want to talk a little bit about that, or?
Yeah, go ahead.
I mean,
do you want me to bring up the?
I saw the headlines at the beach, so when it came out,
yeah. Essentially, they're potentially moving away from their open banking business due to regulatory uncertainty. Even though I think it's actually quite the opposite. I think it's regulatory clarity that they're allowed to step away from open banking, which is no bueno. So they potentially are going to be charging much higher fees for consumer information to other fintechs and companies that tap into them for their services. So not good for fintechs and smaller names, great for incumbents and existing players that are very entrenched in finance.
Yeah, it feels like the pendulum is kind of shifted from banking and having a banking charter for many, many things, too many things, honestly, being just a negative. And fintech is like, hey, you guys go nuts. To, okay, now there are actually some concrete advantages for banking, and maybe we went a little bit too far. So CFPB 1033 is that rule that's being vacated, which is basically when they ended up saying, hey, we're planning to vacate our own rule and we're asking a judge to do that. that's a big shift as well. I don't know, and I don't. We'll have to see where the J.P. Morgan Chases and the Visas of the world go and how aggressive it is. One thing, and I know SoFi, they're going to be fine. PayPal's comments, Alex Chris had mentioned this on the earnings call because an analyst asked, and he said, "Yeah, basically this has no material impact on us at all." So that was an interesting comment. They can't go as far as prices too high, if I understand correctly, just because there are alternative measures. They can always use debit card rails, for instance, if they need to. But that is a lot more expensive than what they're doing. And there has been basically this API structure that's been maintained by banks at their own expense. And some fintechs have taken egregious have access to that, like instead of just like when they actually need to, just over and over and over again. So I like the change because I do think it was, after studying a little bit more, it was a little bit harsh, I think, towards banks. But yeah, we'll have to keep an eye on it as far as it impacting fintechs like, Robinhood, like PayPal, like many others as well, Chime. So yeah.
Yeah, I think the comments from, this is the way that I thought of it, from Alex Chris on PayPal was specifically about JP Morgan, not open banking fees in general. So do you think that if open banking becomes much more like closed banking, that that will start to impact some of the fintechs, especially PayPal and these names?
I mean, like it destroys. I don't know if it's Plaid or Played. I think I always
Plaid,
say
yeah.
it wrong no matter which one I go for. And there are some that are so incredibly reliant on it. I think for most fintechs, it's a net negative. Like there's no way otherwise to slice it. And there are products even for SoFi where it makes things a lot more challenging, like Relay. But maybe there's agreements that'll happen on the back. I don't know how that'll work. But I don't think it's like a massive thing, just because there's two things. Like if they can actually exceed the cost of debit card rails themselves, like I think that's a cap. And a lot of analysts came out and talked about that shortly after the news from JP Morgan Chase. If there's a way to exceed that, I think that's probably where regulators will step in on behalf of consumers, even under the Trump administration. I could be wrong, but there is some pushback towards that. And I would hate to see a world where all of a sudden the consumer experience for all of us is a whole lot worse just because open banking is fully and firmly dead. I feel like that there's a in-between area for where we were before, where the onus was all on the banks. They had to maintain everything and give it away for free, versus closed banking and being very punitive as far as the prices and measures and making it very difficult to access consumer data. So I'd like to see that. I don't know that that'll instantly happen. So there may be some choppiness, but we'll see.
Yeah.
The other thing too is that I think even more significantly could be incredibly difficult for a lot of startup fintech companies that are just not highly profitable, that are not making a lot of money, and that need regular API access from banks. So that may end up actually limiting the number of startups that we would otherwise see. So it'd be interesting to keep an eye on.
It could definitely be some consolidation in fintech over the next little bit as well. But SoFi, for people that are specifically interested in that name, is pretty uniquely insulated. They are their own bank. They will be the sort of JP Morgan in this sense, where they get to choose if the fintechs are going to tap them for that information. They also happen to also have, Galileo and Technisys, which if they do want to incorporate and have more fintechs come into them, they could pick up the slack where other banks and institutions are lacking. But they probably need a bit more, many more customers, to be fair. But yeah. So overall, let's jump over to the Anthony Noto tweet. He was an excited guy today, but he said, could not be more excited about the impact of two technology supercycles, artificial intelligence and blockchain technology, that will reshape finance services as we know them. Then he goes on about his history. However, he does say over 12 million members now. It's not an insane. I saw some comments about like, oh my gosh, this is insanely bullish. It's pretty like if you were to track the daily counts of what we're expecting, we have been past 12 million. So this is not really that crazy. That was only like 250,000 accounts. We should already be over at least 400,000 by this point. So that's not too crazy or mind blowing. But he says, feels like we're just getting started. This part I thought was amazing. He said, we're hiring aggressively and looking for the best of the best in areas in AI, crypto, blockchain, and payments. And any great leader that has the range of working on a startup type products and businesses to scale beyond rapid growth to durable compounded decades of growth. If you are the best of the best and the SoFi way and the SoFi core values give you chills or make your hair stand up on the back of your neck, let's talk. He then puts where you can add in at SoFi Careers, the, put in your resume. However, he says, if you're a high profile individual, you can DM me if you want to keep your interest confidential. Okay. So that I thought was very interesting. DM me, not DM SoFi, not DM SoFi Careers or something like this. The CEO is taking personal messages, which...
Before you close that, show who he tagged, because that's very interesting too.
Yep, that's what I was going to say too.
He tagged Chamath Palihapitiya, Wyndham Clark, Josh Allen, and Kelsey Ballerini.
Does one of them stick out to you, Tanner?
One does stick out to me.
Josh Allen, yep. Great quarterback.
Yeah, Josh Allen, but Chamath Palihapitiya mainly.
Really?
Yeah, why is he tagged?
Because he was in the SPAC.
Yeah, and he's fully out now.
And he has 1.8 million followers. So if he retweets that, but
why would he? He doesn't have an equity stake in it.
I think he still owns like 20% of his stake, doesn't he?
No, I thought he sold out completely.
He sold like 80%.
Well, I mean, there's bigger investors than Chamath to put in here. I mean, like
the Josh Allen piece was the interesting one here.
Yeah. Yes,
because he's not an athlete or a SoFi athlete yet.
Yeah, exactly.
Yeah,
well, it's not announced yet, but he could possibly be a SoFi athlete, as of this recording.
I don't follow those individual names. That's small stuff to me. I don't really care that much.
It's one of those hints, though. Like that's what I think it is. Like the hints that people have picked up on, where Noto has some tweet and it's a number, and that happened to be the EPS number like 3 quarters in a row. Like I think little hints like that are interesting. So I made a post. I said I would be like, if anyone wants to take a side bet, like next week we're going to see a PR drop for Josh Allen and SoFi.
Sure.
For those that don't follow football, like he is a premier quarterback. He's not Patrick Mahomes, but if you're going to pick a number 2 guy, you could go wrong. You can't go wrong by picking Josh Allen. He might be the second best quarterback in the NFL.
No, I didn't mean it like that. That it's a small, like people are getting offended that I said that. I just mean partnering with an individual athlete's not going to change the trajectory of your business. Like,
we'll see.
You disagree? They have 12 plus million members.
He has a big pull. There are a lot of people that follow him. It depends what the partnership looks like. If he's like on an advertisement, that's cool. It'll be additive as far as members, but it depends what they do, what direction they go. Like Wyndham Clark there, great. That's nice. Good golfer. Makes sense. Josh Allen is freaking huge. He's way bigger than that.
Yeah. I mean, I don't know. At this point, like we own a stadium, we own an entire golf league. We're partnered with the NBA.
I think Josh Allen might be as big as those. Maybe not the NBA, but it's up there. It's bigger than golf.
I mean, if you rank all the people from a prestige and perspective that they're partnered with, I would probably make a case that Tatum is on the same level, but none of the other guys, not Herbert, not Wyndham Clark, not Kelsey Ballerini or whoever, that Josh Allen would definitely come in higher than all of those individuals.
Talk to Tanner in hockey terms, I guess. I don't know hockey either. This could be a knowledge gap for sure. I don't follow any sports, and I'm definitely the guy that walks past Josh Allen on the street and actually gives him his privacy because I have zero idea who he is. I probably just walk by and go, wow, that guy's big. Not realize that he's making millions of dollars tackling people, but
yeah, I mean, he renewed his contract in March for a 6-year extension for $330 million, Tanner. So that should give you a sense of where we're at.
They're trying to put it in my terms. From the sounds of it, it sounds like he's more like AMD, but from what Roy said, I don't know.
I mean, like he's amazing. So and like the other thing too is he's a high character guy. I think SoFi has done pretty well with, for the most part, hitting on those notes. I mean, that's Anthony Noto's bread and butter too. So
he's a quarterback, no tackling. Okay.
Just about.
Yeah. Yeah, it's about the due diligence. Okay. Yeah, that's cool. I mainly like the hiring part.
Yeah, I mean that was bigger, but like it's we're real quick before we talk about the hiring stuff and the wording more. Like Noto doesn't just randomly tag people to his post like that. That's a clear indication of something. Now, could his finger have slipped and he tagged a premier NFL quarter? No, I'm not even going to.
Or Chamath.
Or Chamath for that matter, or two people that have represented SoFi as well. So, I'm also curious on the Chamath thing there too. Like, is that just more of a tip of the cap? Like, hey, look where we've been, Chamath. Thanks for getting us here. I think that's probably what it is. But we'll see. It was just really interesting.
Bro, know the room. I mean, he's like generally like retail is not a fan of Chamath.
Yes.
And especially now that he's launching a new SPAC, I don't think you want to really bring back those memories of SoFi being a Chamath SPAC in the first place. Now that he's launching a new SPAC.
It almost sounds like they're trying to do some sort of thing with him, or like if they're bringing social capital or some sort of VC fund or something like this to SoFi, the way that he would tag Kathy Wood or something like this because of ARK. They're definitely connected to some degree. Chamath and Noto, they partnered to bring them public. So maybe they're working on something else as well.
Yeah, Simon is like spamming my chat. He wants everybody to know that Josh Allen stole Lamar's MVP, and Tanner doesn't know what half of those words in that sentence means.
Well, I know what an MVP is, but
the quarterback is the guy that throws the ball usually. So
yeah, no, I got that from.
It's called football.
I literally think I realized what a quarterback was from the Tom Brady roast, because I saw that. But no, I can't honestly say that I have watched a single game of. Are they even called games, or are they called like matches or something?
They're games, and you may not know this, and so I'm assuming that there's some that it's in our chat too. But like the NFL is the sport of America. Like basketball is great, baseball. And technically, like that's a national pass. Whatever. No, it's football. Like that gets the most eyes. That gets the most interest. So that's why they went with SoFi Stadium.
Yeah. Obviously, Noto cares about it, and it's huge. Like I'm aware how large sports are, but yeah. But yeah, I just never cared about it.
A lot of people do. So
yeah. No, I get it. I see the follower accounts, but like, I guess I hear more of the names of like the LeBron James, Steph Curry, stuff like this more often than I do. Maybe that's a Toronto thing. Well, basketball is pretty big in Toronto.
So to maybe transition back to the tweet and the subject of it, but related to this as well. They mention a couple of things in there. AI for one, certainly, but crypto is a big thing that they mentioned. Payments as well. And with all of those, maybe to a lesser extent, AI, just like with the bank and with your banking products, name recognition is huge, because if you see that this is a real institution, that they're doing all these things, and there's all these people that and like Josh Allen's of the world, hypothetically, that are sponsored by SoFi, you're more likely to if you're looking for a bank. I mean, that helps. It's been accretive. But I think it's even more significant with where they want to go with crypto, just because for a lot of people, like they are crypto novices. We kind of live in a bubble just because we're in the investing world and we're on X heavily. A lot of people there invest in crypto, but there's a lot of folks in the United States that still are skeptical towards it, that have questions, they have concerns, that they're not looking to use it. I had a post on Bitcoin today where somebody was like, "Yeah, but who's going to actually buy Bitcoin?" It's like, who's not going to at this point? I mean, just about. And so I think this name recognition and these type of sponsorship deals to get into arguments and get that audiences and name recognition in places where you haven't before is even more important when it comes if you want to scale your crypto product. So it'll be interesting to see where that goes. But yeah, what he mentioned there as far as that paragraph, you're dead on, Tanner. That's very exciting.
Yeah. All right. Was there other? I'm trying to think. The week I felt like was really, or went by really. I guess it was long. I don't know. Some things that happened this week felt like they happened last week. That's what I'm trying to say.
For SoFi, the other piece of news was the remittance piece. So
yes, I was going to say, I was just scrolling through his thing. I can't believe that it was this week as well. This felt like forever ago also.
Yeah.
The LightSpark news. So Bitcoin's it's not owned by Bitcoin, but they're a company that runs under Bitcoin, LightSpark, that uses the Lightning Network to help with, instant payments for Bitcoin. SoFi ended up partnering with them, the first U.S. bank to partner for instant global payments. What were your guys' thoughts about this?
I liked it, but maybe not for the reason that others liked it. I don't think it's a meaningful revenue driver. Remittance is like look at Wise, look at PayPal Zoom, look at Rio. It's a very low margin product, and they're partnering with somebody, so it's even lower. Yes, they're using crypto. I understand that, but what I really liked about it is it's another addition to SoFi's platform. Which, as they continue to do that, the platform becomes more and more compelling. There's all sorts of great features, and it makes it so that you have a much stickier product. And I think that's a great thing. Plus, you'll have some people that join your platform with each of these. I don't know if they just join for remittance specifically, but there will be a lot more of these, I think, over the coming years, especially when they complete what they're doing with Technisys and Galileo on the back end for their tech stack. So I loved it. But yeah, if you're looking for it to like get them to go up like another few percent in the year for top line revenue, don't expect that.
I think that this is an important ad from SR that for some people where it is important, it can be the deciding factor. I think that that's an amazing way to put it. It's just another check off the box that customers will maybe choose to go from Wise, where they put all their payment. There could also be customers that are choosing SoFi and Wise, or SoFi and PayPal, that will no longer need those selections because this will be much cheaper, right?
Yeah. Well, and the other piece, go ahead, Davis.
The Josh Allen news is bigger than this, like basically.
Yes, it is far, far bigger.
Yeah, agreed.
I don't really care that much.
You're a SoFi investor. You should.
No, because you know what? It doesn't mean that the CAC ends up getting lowered, right? Like we don't know how much he paid him. They could get Taylor Swift if they had the money. Like it doesn't mean that like if he's the biggest athlete, they paid the biggest paycheck.
So it's kind of like Tanner. This is unrelated, but let's imagine SoFi actually launches an insurance product for pets. And I might say, well, I don't have pets, so I don't care about that. A lot of people do. And for a lot of people, depending on what it is, hypothetically, like they'd be like, hey, this is great and highly meaningful. The remittance side, yeah, it's a great thing because it is for some people like, oh man, this is great. And I'm going to stick with this platform because I love the way they're doing that. The other piece that I loved about that too is that SoFi didn't build it themselves. And I know that sounds backwards, but we can see with what they're doing on the technology side on the back end and all the other stuff that Noto mentioned. I would much rather have SoFi focus their talent on something that is meaningfully accretive as far as revenue, as far as bottom line dollars, as far as some exciting new product that if they build, it's going to be that much better versus partnering with somebody else. So I love the fact that this is a partnership and not something that they spent like 3 or 4 months, with a lot of devotion towards.
I mean, we're talking as if the news actually came through. It's just one person he tagged. But
no, he was talking about the LightSpark deal.
No, he's talking about the Josh Allen news.
Well, I was talking about LightSpark actually, but yeah, Josh Allen's bigger. You're right. Tevis is right here.
I mean, look, I think the LightSpark is good because it validates the management's direction that they've guided for, moving closer and closer into that blockchain focus. And Noto even reiterated it in his latest earnings or in his latest tweet. So I think we're going to see a lot more. I'm just waiting for the other shoe to drop. And what I mean by that is what is happening with crypto? When is that coming back? We got a long laundry list of SoFi Invest and the features that are coming through the end of the year. We don't have anything for crypto. We have a wait list, right? I want to know when it's actually going to be coming back and what the roadmap is for that. You know what? I would actually love it. And this is probably not going to happen, but I would love it where SoFi starts throwing up a slide in their earnings call similar to Robinhood of like, hey, here's the product stuff that we did this quarter, or here's the product stuff that we have coming up next. And even if it is just a couple of bullet points and not, massive things, it's still great because I can still see that there's forward momentum. I'm sure there is, but it would be great for them to talk about it more, especially because Noto is, laying out the entire next quarter's roadmap in a tweet. Like just formalize that, put it in a slide. And I think that could also focus the market more on product innovations for SoFi and then change somewhat the perception of what SoFi is moving into, especially on the back of AI and blockchain.
Yeah. Yeah. I do think that there is real momentum going forward. We see it in the hires. They hire in multiple new crypto people every single week. And now Anthony Noto says that's going to ramp up even faster. But it would be nice. It would be nice. I hope the Josh Allen news is huge. I just wanted to state that, like, let's say he can reach out to his, I don't know how many followers he has, 20 million, 50. I don't know how big he is, but I'm sure he's huge. But if he had 1 million, they would pay a certain rate. And if he has 50 million, they're probably going to pay somewhere around 50 times that. So do we care honestly that much? I mean, they're still paying for Compound and Friends and all these other small creators and Airrack and all those other guys that have made SoFi videos. It's all part of the marketing budget, right? I don't think this will probably change. It only shifts where the sales and marketing budget is going.
Yeah, I mean, we don't know what the budget looks like really until they guide for it next year or they comment on it. This to me, I mean, we don't know. We're making a lot of assumptions. It could just be like that they're friends and he's like, hey, Josh, like, look what we've done. So I don't know though. But I think that they may be opening the pocketbook more and marketing even more aggressively, especially with what they know that they're doing as far as in those areas that Noto had tagged. It's very similar in my mind to where Robinhood was.
This is the NVIDIA guy. He has 645,000 followers. You guys compared him to Steph Curry and LeBron James. Are you guys out of your mind?
I mean, like,
you guys said he's one of the biggest creators. He doesn't even have 1 million followers. You guys made me out to sound like a dummy. This guy's a small creator.
You know how many times you post?
We would have been better to partner with Marquez Brownlee. It was like 20 million followers.
He posts like twice per year. It's his X presence is not the best.
That's just his Twitter, dude.
Well, what's his? I thought that was Instagram. What's his Instagram?
1.7.
I mean, yeah. You guys made him out to be like the Messi of football.
No. We said he's a step below Lamar. I mean, maybe Lamar, but Patrick Mahomes.
I think, Tanner, like, it's also interesting I don't know if they're thinking about this internally, but it would be interesting to think about, like, what is the potential of the team making it very far into, so for example, for NBA, right, the Celtics won and they get so much extra coverage in those playoff games, running the commercials or whatever, because their guy is on the team that's making it through. And so
I get the Nike effect of like partnering with Michael Jordan and stuff. Like, it's a big game changer if they win.
Yeah, if the Bills go far this season, then I think they're going to get a lot more mileage out of that partnership.
Yeah.
Curtis actually had a great point too. Have you know the Bills Mafia, right, Tevis? You've heard of that term? Okay, yeah. So for Tanner, basically, if you want to look at devoted, fanatical fan bases, Eagles is probably number one, frankly, because Philadelphia is crazy with their sports. But Bills might be number two. They have a very tight knit group of fans that anything that Josh Allen says, does, is sponsored by. They're all over. They do a lot of charity stuff. I mean, they're a good group of very devoted fans. Sometimes you get a little bit overexcited. So that's not a bad thing. But I don't think I finished this point earlier. Like this to me could mean that they're opening up that pocketbook to actually market even more aggressive. And I think that that's a really, really important thing. Similar to Robinhood in 2023, when conditions went from just bear market and terrible to like, okay, these are right conditions for growth. We're going to expand our marketing expense and we're going to grow even more rapidly. For two things. One, they realize like there's so many tailwinds right now. They truly believe that, and so they're going after that to spend it. And two, they have a lot of new products that they're coming out that's so important that they capture large chunks of the market. And three, at least right now, and this I think is the smaller factor, the market is very much giving a premium to companies based on revenue growth more than anything else. So I think, I don't know, this could be something that's much, much more significant than what you're reacting by. It's way bigger than the remittance thing, which is really nice too, by the way.
I think Ed nailed it. I think Alan will be their crypto guy. Oh, that would be interesting. That would be very interesting. If we have a specific guy to launch a new campaign for crypto coming back, I could see that coming back. We should have got Tom Brady for that. That would have been a good recovery on his
No, man, you don't want that. No, it's like the worst person to get for crypto.
It was just a little joke for his FTX incident.
You should get who was it? Not Odell. Maybe it was Odell. There's a couple of players that were like getting their entire salary in Bitcoin and like way before anybody else. And if that's the stance you want to go, then yeah. Or yeah, Scottie Pippen. That's funny. Scottie Pippen, who met Satoshi back in the 90s.
Oh, yeah. I remember watching those. That was so funny. And everyone's sitting around them like, why are you lying right now?
I forgot about that.
Yeah. Did you guys see that Trump is taking officially a 10% stake in Intel? It's official.
Yeah. I don't know. It signals to me at least a red flag. Sovereign wealth fund I'm fine with. We do need to tackle our debt. I'm not like super opposed in this case just because the United States government has given Intel so much money. Them owning a stake is not the worst thing, but I don't want this to be a precedent where the United States government starts getting direct ownership in a lot of companies, because that's a very different form of government. It's a very different form of economy, and those don't do well.
Yeah, Roy and I spoke about this quite extensively yesterday, and I think it was yesterday, right? Yeah, and I think some good points were brought up, and if you wanted to secure your position in semiconductors or something along these lines in foundries in America, do it through a grant, do it through even a loan if you're looking to make back more than what you put in. But long-term equity might end up, making sure that Intel stays ahead of the game, not versus international businesses, but also versus US startups, which I think is mainly the problem, that every company should be getting a fair shake in the United States. And this might incentivize the rules to be swayed more towards the incumbents, which already does happen through lobbying and paying off politicians, but none of that is generally allowed. That's just usually done in the dark. This seems very open and and straight in your face.
So
yeah,
I think this is going to be, one of the things that Roy and I will talk about bootleg, but is it time for us to put a YOLO bet on Intel? Because that Trump is just going to pump his bags, absolutely pump them. And the company, I'm not really excited about Intel at all, but it's kind of interesting now because of that stake.
Actually, I thought about it briefly. You mentioned it, at bootleg, but it didn't click. That clicked. So yes, Tevis, probably it is.
Yeah, I called whenever this first got announced, I think a few days ago or something. I called Steve and I was like, "Are we buying Intel?" And then there was other rumors about Micron and TSM and all these other ones potentially catching bids. And based on this news, I mean, there's a likely chance that those names actually do end up catching a bid. So I don't know if Micron's maybe the play or something before they end up getting in. Who knows?
Yeah.
What's a spread trade you can put on with Intel and a competitor that's foreign, where you can basically just do the Trump pump trade?
We could just do a vertical spread. Like Intel's not one that I would want to own long term, but like as a swing, I think it makes sense actually here. So that's a great point, Tevis. I am adding it to the top of my watch list right now, so I don't forget about it.
So Roy, are you buying Google or what, man?
No.
I mean, the news that's been coming out has just been a little too bullish to ignore.
Are you selling NVIDIA to buy Google?
No.
Yeah, so that's where I'm at. I bought more in NVIDIA. I'd rather own more NVIDIA.
All right. I like that. I don't mind that. Still bullish NVIDIA, which is crazy, but yeah. Someone was actually talking about in the chat really quick. Let's bring it back to SoFi because this was interesting. I'm in this SoFi group chat. I think maybe all of us are, where people are actively talking about SoFi and doing due diligence on this business. These are some of the smartest people in this name. And one of the things that were highlighted was the problem with purchasing at $25 if you have purchased between $5 and $7, for example. How do you guys get around that idea of potentially buying a company where your average price is, 1/3 the cost or something like this? And like each individual buy jacks up your average price by a great extent. So even new investors that come and do their due diligence on SoFi might look at it and say it's cheap, but existing shareholders that ended up buying at much lower rates might look at it and say that it's expensive because they own it.
Yeah, what at least works for me is I will force myself to buy not a large amount, but a small amount of shares that that is way, way higher than what I last bought if I want to add to a position. I did this with Tesla a year ago, maybe more than a year ago. I've done this more recently with Palantir. I've done this in other names too. Robinhood was one of those where I was like, oh man, my averages. And I just have to, and I think almost every single time with every name, once I think I'm done with my position and I realize like, hey, it's not where I would like to be relative to my conviction in it, make that initial buy. And then it makes it easier to make subsequent buys, or even just what I'll sometimes do, like I did with NVIDIA too, is just, and also Robinhood, this is a set buy, a DCA. I don't care what the price is. It's automatic. I don't have to think about it. My emotions don't come into it at all. And the last thing is, when I gave a portfolio update, maybe I think 3 quarters ago, I had my cost average there, and I didn't get any feedback on it, but I removed that, and I did that not really to hide data from anybody. I mean, like I don't really care what my price average is, but I realized like that sends a wrong signal to new investors that struggle with that the price average is what matters most, and me having a $12 price average at Palantir is awesome, and that's the goal. Well, no, if I had been smarter, I would have bought Palantir at 40, 50, 60 bucks and added even more to it. It was large enough. I wasn't going to do that, but so I didn't want to send that mixed signal there. So instead, I'm like, okay, this is my percent allocation, not my average. I'm not going to show that anymore, at least in a bull market. I think in a bear market, that's really useful to show. But I think that we're a long time away from a bear market, just because it shows the power of averaging down. But I think for most people, And you guys comment in the audience, please. I'd love to see this too. Is it harder for you guys to average up in a position that's running, or is it harder for you to average down in a bear market when the price keeps falling?
I'd say it's probably the former for most people. And even I have a trouble averaging up sometimes, but I've got a really great, I was going to say support system, but like an investing support system of people around me, like yourself, Tevis, Amit, Chris Patel, all of these guys that I look at as, legendary investors. And Amit in particular is so good at buying on the way up. When everyone says someone is crazy and that this is so overblown, we have to stick to the thesis and where this is going. Buy more, right? He got me to continue to buy more, and well, he didn't get me to do anything, but he just said, where do you think SoFi is going to be? What's the time frame on that? What's going to beat that? Okay, what's stopping you from buying more? So that's the amazing part is trying to buy more of a company and raising your average price, because the average price doesn't matter. Saying, oh, I own this stock at $3 is not the goal. It's having the total aggregate dollars in that stock be the goal, or how much has appreciated. So to some degree, if someone holds a stock and their average price is at $3 and the stock is at 300, that's almost a sign that, like, oh my God, why did you have zero faith to add on the way up? It would have been great if you purchased at 6, 9, 12, 20, 30, 50, because those are still doubles at 50, or sorry, I guess I said 300, but you know what I mean. So Tevis, anything to add on DCAing up or down for the people that potentially have been holding on to SoFi for a long time? Is it time to take profits? Is it their own portfolios?
I'm really bad at DCAing up, honestly. And because I always psych myself out into thinking that there's other deals in the market that are cheaper. And so I think that I'm like bargain hunting, when in reality, I have to concentrate in where my mind share is. And if in fact it is, and like, if I know about SoFi completely disproportionately to anything else, then that should be reflective in my portfolio. And yeah, it is, 20% or so, but there has been points where SoFi has been much larger than 20%. And it's just, been in a portfolio where I've let shares go because of covered calls or whatever. And I've been really bad about DCing up. What I will say is, one thing I've learned through this whole ordeal with SoFi is that 2 years is a hella long time for leaps. And those things, like, I think there's a lot of time that you can actually squeeze out of them, because there's stocks that make moves in very short time frames. Like for SoFi, for example, it doubled in the course of a month. Yeah. And you might have bought leaps at 15 and the stock fell to 10, and you were thinking to yourself, oh my gosh, like my 2027 leaps are completely underwater. And now your 2027 leaps are maybe up 3x or 4x because the volatility and the time you have. So I think, like, if I had to do it differently, or how I would translate that learning is, like, in new positions that I actually think are gonna, be where my price target is. So for example, for HIMS, if I think HIMS is going to be over $100, especially in the next 2 years, I'd be silly to not buy leaps, and I'd be silly to sell those leaps. And so I think that, yes, the shares are very important, and averaging up is difficult to do, and probably the safest way to go about it, because your call options can go to zero. I'm not saying that everybody should get call options, but I'm saying that what I learned was I sort of didn't have the same level of desperation to average up, because I also had the leaps that were open and that have a crazy upside. Like right now, I can take ownership of SoFi shares at $10. And I'm not selling those, nor am I exercising those, because I still have like a year left in those. You know what I'm saying? So I'm like, okay, well, I'm just going to chill. And I think that's where the craziest percentage gains that I've gotten are.
Yeah. No, be careful with the options. They do have expiries, but yes. I see some comments all the time. First off, as we round out this episode, let's pour one out to all the people that during our $6 and $7 stream said, I've had enough. This is opportunity cost. I'm selling. Sorry, guys. Investing's hard. But two, to the people who say, hey, you know what? We probably are not going to sustain $25 for very long. I've seen comments just recently about this, or how we're going to fall under, we're going to get opportunity under 20 again. All of these sort of comments. The truth is those are guesses. Those are hopes. And we don't know. If rate cuts come out and SoFi ends up putting out a new quarter that accelerates growth rates and continues to push up margins, I mean, who's to say that 20 is not the floor anymore, or 25 is not the floor? I think just fundamentally we have to continue to, I'm not going to speak for anyone else. I'm going to continue to focus fundamentally and where the company is going, where the total addressable market continues to expand, and consumer behavior and the margins for that. So this is a long-term investing space, right? Whenever I buy companies, just because we're up a lot, if you want those 10Xs, you got to go through the 3Xs and the 4Xs and all of those things and continue to hold in order to find the insane growth on the other end. So this is a hold for me, but that's just my own personal take. What about you, Roy?
I mean, yeah, the options there might be some that I exercise, but those will all be gone by the end of next year. The 2027 options aren't out yet. So, January 2027 are, but not further out than that. So, but the shares I plan to hold long term, and I don't have a reason to sell them until I do. So, if, for instance, we're going to buy a yacht, we're not going to buy a yacht, but hypothetically, we need the money. I'm not buying a yacht, Tevis. So, if I do, you're invited. But
I mean, I'll split with you.
All right, that's great. But there's
You
nothing wrong
can
with
buy
selling
your own.
So, but we have. I don't know any major purchases that we need to do, anytime soon, unless we need to help out maybe one of our kids with college or something like that. So, I plan to just hold as long as the company is executing and I don't need the money. I don't see a reason to sell at all, other than the options. And that's why I do options in addition to shares when a position is very undervalued, because that allows me to take and realize some massive gains and not have to touch and sell a single share, which I've not.
Can't see Nvidia doing 10x from here. Market cap too big already. I'm talking more about much smaller names.
And eventually Nvidia will 10x.
It's interesting though, because I don't know if you guys ever read the 100 Baggers book. I think Chris Meyer is the author. But it came up recently. I think it was Data Driven Investing or one of these guys posted about it, where basically every single position that's done, a 10 or 50 or 100x has at some point or another dropped at least 50%. And so I think people think of these 10x's in a straight line, and I think some of FinTwit might be a little spoiled because they have had straight line 10x's. So I don't know. Well, okay. Other than the initial dip in Palantir and Robinhood after they initially came into the market, since 2022, it's been fairly, straight line-ish versus SoFi, for example.
You can't discount those at all. Robinhood went from 80 to 8.
It didn't go from 80 to 8.
Yes, it did.
Yeah.
Where did it go from 80 to 8?
IPO hop.
On day one of IPO, you mean?
Yeah, the first week. Yeah, it was crazy.
Okay, well, okay, sure. Okay, it went from
Palantir went from 40 to 9 or 8 or whatever, 7.
45 to under 5.
So what I mean is the companies fundamentally executing corresponded with the stock getting rewarded for that. But for SoFi, that signal was much more delayed, whereby the company was executing for a consistent period of time, and there was a long gap until the stock finally got rewarded for that, right? So that's what I mean by the straight line, is that sometimes the market won't correspond, and sometimes you're going to have these massive drawdowns, and that's the difficult part. It's how do you hold through and have conviction when literally everything else is going down?
Yeah, what I would usually say is like a lot of those companies usually had great fundamental growth underneath them. Sometimes people look for 10x's or 100x's sometimes, and the companies that they're betting on might not have the signals that a Robinhood or Palantir or SoFi had. So I'd just be careful trying to always catch the next one. I've already seen comments in this chat where people are like, hey, why are we talking about SoFi? Let's look for the next 2x this week now. And it's like, oh my gosh, I promise, like, I can't promise you anything, but most likely you're going to do much worse than me looking for continuous new opportunities than sticking with the ones that work.
Yeah.
Very few can do that.
And everybody needs to find their own investment style that works for you. Like once you find something, one of the guys in my chat said it, like consistency is key. That matters, but you figure out what works for you. You continue to hone that. You don't just stay static, especially if things are changing. For me, like having a combination of options or leaps and shares that I just don't sell works great because I make a lot of money. I can take that money and put it into something new, or buy more stock. I've done that too. And then just let the stock and the company keep doing its thing. Others are like, nope, only shares. That's all I'm going to do. You can do great in that with great companies over time. Time is on your side. Be consistent. Figure out what works well with you. And if it's different than what works for us, if it's working for you, that's great. I see some people commenting on here like about Open Door and stuff. Like, guys, I'm not in that. I'm skeptical. But if you made money, congratulations. Like if you are able to identify some of those momentum plays and do that on a consistent basis, be careful. But if it works for you, great. Keep doing that. Keep getting better.
Yeah. Yeah. And if you spam your ticker, you're getting banned. All right. So, no, that was a joke, but I didn't get any laughs. So now I'm just here on my own island. All right. After hours? We good to go? Okay.
Yeah. Let's go.
Yeah. Good audio podcast from you guys, eh? All right, ladies and gentlemen, thank you all so much for watching. Really do appreciate your time. But bye for now.